Metals, that has been another hot pack, whether it is the share price, the global supply constraints that we are seeing, and of course in the thick of earnings season, the question is, are we going to see consistent price hikes as well? Joining us to talk about this and a lot more is VR Sharma, the Managing Director of JSPL. Now, what we've seen at JSPL of late is also a sharp reduction in its debt. We also thought it would be a good time to talk about expansion, pricing trends, as well as demand trends. Thank you, Mr. Sharma, for joining us here on the market. My first question to you is, and we've seen this across the companies, right? The price hikes that have been introduced. Do they take care of the supply constraints? Do they take care of the inflation that we've been seeing in raw materials, or in the days, weeks to come, you will have to do more price hikes, or the industry will also have to do more price hikes?
Yeah, good morning and thank you very much. The overall input costs, they have gone up by rupees 10,000 per ton. The price hike has been ranging from 4,000 rupees to 6,000 rupees a ton across all products. We are not expecting any more price increase in this particular month or next 15-20 days time. Rather, we are expecting that the international freight prices will come down. Today, the damages level are about $55,000 to $60,000 a day. It used to be about $15,000 to $20,000 a day. The coking coal prices are about $410 a day, $410 per ton FOB Australia. And we are looking that these prices will melt down, or if not melt down, they will come to a moderate level, about $350 or $360 a ton. The scrap prices are all-time high. These are at about $550 to $570 a ton for the shredded scrap coming to India or anywhere in the Southeast Asian countries. So we are expecting that this should be at moderate level, about $500 a ton. Because, the Chinese economy is passing through a very, very challenging time. There are more than 20 companies, those who are unable to meet out their obligations in terms of the bonds. And because of the non-payment of bond installments or the bond interest rates, that has created problem in China, and the whole property market has gone down. So we feel that the Chinese steel consumption will come down, and Chinese steel production should take a hit about 5 to 7% in times to come. So this will stabilize the world. Today it is abnormally high. I'm sure there should not be any other price increase. If there is a price increase, then it will be not good for the customers. This is what I feel today.
So are you then in the corollary of what you're saying, the lag of the 40 to 60% that you were talking about? There may not be a need to increase prices because by then the situation will normalize. Is that what you're saying?
Yeah, if the prices are too high, then this becomes unaffordable for a customer. Unaffordability means the overall offtake will be less. And that is a situation what we should avoid. Any country should avoid that situation. There should be a demand. The prices should be affordable. Today, the prices in India are about 70,000 rupees a ton, approximately, I'm telling you. The construction bar prices are about 55 to 58,000 rupees a ton. So these prices are already on higher side. But the steel industry is compelled to reach to that particular level because of the input costs. So what we are expecting that the input costs should go down. The iron ore prices have already started moving downwards. The coking coal prices are to move. The international freight markets are to be softened. And the ferroalloys, other consumables, they are required to be softened. So in a 15 to 20 days time, I think situation will be normalized. And I'm not expecting any increase further. It should be avoided. And we are interested that the input costs should come down. The coking coal prices should come down. International freight market should come down. There is a big jam in Pacific Ocean from China to America. I mean, the entire sea route is full of vessels. The voyage time, which used to be about 7 to 10 days time, Now the vessels are waiting there in the Pacific Ocean and South China Sea for more than 20, 30, 40 days, and as long as 50 days. So the world community, the world different governments, the industry, they should work together to bring down the normalcy in the world. And we should try to reduce the costs. We should try to reduce the cost of coal, whether it is steam coal or you say thermal coal or coking coal. We should try to reduce it. The iron ore is at a moderate level now. So if the coal prices they come down, then I'm sure there won't be any other increase.
Slightly digressing from what's happening to prices and input cost, we understand that Government of India is looking at selling some plants of sale, not sale in terms of a strategic investment, but some steel plants of sale. Would you be interested if there are some organic assets, inorganic assets available?
Apparently, no, because our major policy is that we should grow brownfield. That is easier and commercially viable. If we go for a inorganic growth, then there are issues. For example, what will be the price tag like, and what are the advantages and disadvantages, the technology, because any plant which is 20 years old or 25 years old, that means in the year 2021, we are compromising with the technology. So things are changing very fast, very rapidly in the world. So today in 2021, we are looking at technology for 2030. And if you go for a project or plant, we go for the acquisition, say with the technology of 1980 or 1990, or say latest by 2000, that won't be a right fit in our business plan. But it is a business. We'll definitely be participating if it comes to the table. But our interest is in brownfield or greenfield expansions rather than going for the acquisitions.
If I work with an assumption that because of ESG, a lot of new global capacity will not get added. If I work with an assumption that Chinese will not like to export steel because there is any hardly value addition there, and they're cutting their own steel capacity, what happens to a company like JSPL? How large do you think export would be for you? And could we see a complete different shift because export realizations for steel companies are higher than domestic realizations?
Yes, you're right. Today also we are exporting about 40% of our total produce. This is a very good spot market, but it is not a healthy situation. The demand in the country should increase because the domestic demand is always sustainable. So what we are expecting that 30 to 40% exports is all right, but more than 40% exports is not a good sign because any ripple in the international market will affect the company adversely. So we have charted out a policy that yes, we will be maintaining our export share of our total produce 30 to 35% and not 45 or 50%.
If you're looking at increasing your capacity, something which Nayantara asked you, and I'm going back to it again, it's a CLSA report which in my mailbox, JSPL is raising its capacity by 80% in the next 5 years. That means that you feel that somewhere the steel cycle is there for at least 3 to 5 years, because if you're committing to expand capacity, which will take its time to kick in, and by the time it kicks in, you're still confident that you will be able to sell that extended product capacity, which means that you are fairly confident about a 3 to 5 year steel cycle.
I'm fairly confident about 10-year steel cycle, not 3 to 4 years. The government of India has taken a very ambitious plan, which is very feasible. That is 300 million ton of steel production and consumption. This is a very, very solid and realistic plan. So to reach to 300 million ton, the delta today is about 180 million ton. So who will produce this 180 million ton? There are 5 large players in the country. These 5 large players today we produce about 52 million ton steel. In next 5 to 6 years, we'll reach to a level about 120 or maybe 130 million ton steel. The secondary sector and the small steel plants, they are facing acute shortage of input raw materials. And because of the economy of scales, they'll be loser in times to come. Like the iron ore prices, the scrap prices, the DRI prices, coal prices, the energy prices, everything is affecting very adversely to these small plants, and it will be very difficult for them to go for the further expansions. So all of the plants, those are of having 500,000 tons of capacity per year or 200,000 tons per year, they will be phasing out in times to come, because not because of their today's planning, but because of rising in the input costs, and situation will keep on creating problems for them to sustain and survive in such kind of environment, and especially the ESG issues. So we feel that the total production from the existing resources, including the 5 large players in the country, will reach to about 180 million or maybe 190 million ton. So balance 110 million ton, from where this will come. So country will have to invite foreign direct investments in steel because 300 million ton is a very, very realistic target. Or country will have to have a policy to support the newcomers in the industry within the country, or to support the brownfield expansions in country. So the cycle is going to remain for another 10 years time and maybe more. The China is reducing their capacity, China is reducing their production. That is a good sign for India. And the Indian steel industry will have to gear up. Today, we are just at a level about 100 million ton. So the journey is too long. To reach to 300 million ton, the delta from today is 200 million ton. This is the reason JSPL has taken up a plan that we'll be doubling our capacity by 2025. So doubling the capacity means we'll be at a level about 17 to 18 million ton. Still the gap is too wide. So how to fill in this particular gap? There is a big question, not only for us, but for the entire industry and for the government also. So government is very, very ambitious. They have a very good plan. The Niti Aayog, Steel Ministry, Ministry of Steel, Government of India has charted out a solid plan that we had to reach to 300 million ton. And that is a very realistic plan. So I think this particular cycle will continue for 1 decade.
I think the biggest headline you've given us, Sophia Sharma, is how you're seeing steel being a 10-year-long strong story, and maybe that's why JSPL has publicly been saying about its ambitions of being a pure-play steel player. You've been divesting non-core assets, including power. But for today, thank you so much for joining us and for being so candid about what's happening in the metal pack as well as the steel sector at large. With that, we're going to take a short commercial break. Stay tuned, a lot more coming up.